Hi, I am Pallav Pandey and I have been an entrepreneur for last 10 years. In this time, I have built and exited from two companies. My first company was Nolarity, which was funded by Sequoia and Mayfield Ventures. The company is currently valued at about $100 million. After exiting that, I started Fast Fox, which was funded by Lightspeed and Bloom Ventures. The company recently got acquired by Housing.com. What we also do is use our learning around building startups and the broader ecosystem to invest in early stage companies. Our belief is that the internet and technology is creating fundamental disruption in the country. What we expect to see is entirely large and new companies getting created out of India, and these companies today are just very small startups. So we use our understanding to identify such companies and invest in them early. Our track record has been very good. For example, we invested in Docquity, which returned a 10x return over 2.5 year period for our investors. Class Plus, we invested 2 years back and it has returned about 5 times to our investors. LoanSimple is a very interesting company, and I'm going to share with you what is our thesis of investment in LoanSimple. But before we talk about that, let us just talk about what is the market in which LoanSimple is operating. The market is very simple. The market is about giving loans to small businesses. These are actually, I'll help you visualize what is the small business we're talking about. These are basically micro retailers. These are people who are running a shop in your local shopping market. These could be the grocery guy, this could be the hair salon, this could be the chemist. All of these guys need loans to further their business at different times, maybe stock inventory during Diwali, continuous requirement. And what is very interesting is that in India, the smaller the business, the harder it is to get the loan. So while on one hand, somebody like a Vijay Malia can take thousands of crores of loans without very easily, but a small businessman, a small retailer is not able to get a lakh, 2 lakh rupee of loan easily from the bank. The reality of this market is that banks struggle. Banks say that we do not have the capability to give loans and to recover loans from small retailers. So, what happens consequently is that these small retailers go to the local sahukar or the local money lender to get this loan, who will charge anything between 3 to 5% per month as a fee on this loan that has been given out. There are two fundamental things in this market which needs to be done. One is you have to somehow figure out whether this person to whom we are giving out a loan is loan worthy or not. And then you have to do collections at a reasonably high frequency, so that at any point of time, if the local merchant has some money to give you, you are collecting that routinely rather than letting it all get collected once in a month and all that. So what is very interesting is that the local money lender does a great job on both of these two issues, because he is sitting in the local market. He has some sense as to how good or bad the business is going for this person, and also his ability to collect money either naturally or by using some force or coercion is also there. So that is why this whole market, which is a huge market of giving loans to micro retailers, has not been formally tapped so far. Here in this market now comes LoanSimple, and we'll talk about how LoanSimple is disrupting this. LoanSimple has created models to judge the credit worthiness of micro retailers in different verticals, and these models are vertical specific. They take into account how big the shop is, which market it is, how much money is showing up in the bank accounts. They will do certain estimates around how much money would not be hitting the bank accounts, but this guy still has it, maybe dealing in cash, etc. And basis that they are able to estimate what is the credit uh, worthiness of this person, this micro retailer. The other very interesting thing that they do is daily collection of loans. The biggest insight that LoanSimple team had on the market was that it is, very easy to give out loans, but of course, in a country like India, very very hard to collect it. And um, the merchants, while they have all the intention to pay back the money, they genuinely are not in control of their cash flows. They will keep having, unexpected expenses here and there. A police inspector will come and extort some money, and suddenly this guy does not have money to repay the EMI of the loan that he has taken. This is bizarre, but that is how the market works. So what Loan Simple guys have figured out is that on a daily basis, if they collect some EMI, they are able to manage their exposure very, very well. So effectively, what happens is, let us say the merchant is using a credit card machine that is provided by Loan Simple team. The money comes to the credit card machine, comes to Loan Simple. They deduct their EMI and pass the balance of the money to the merchant. That ways, they don't have to worry about collecting large sums of money at any point of time. They are collecting their money on a daily basis. LoanSimple has gone beyond just the credit card machines. It actually gives its merchants a QR code sticker using which now they can collect payments digitally from their customers who are using uh, Paytm, PhonePay, or any other payments app. The merchant using the sticker given by LoanSimple can collect the payments. What is very interesting is the underlying change that has happened in the market. A lot of people do not understand it. In India, the government has introduced UPI. What UPI allows is a free bank to bank transfer. So, what that means is that a payments company which allows the customer to pay to the merchant does not make any money in the transaction. So, it's very bizarre. Think about it. Paytm, PhonePay, which is doing TV ads, giving massive amount of cash back to educate the market to start paying the merchants digitally, are not going to make any money in the transactions. So what is the game plan? The plan for these companies is to get into financial services for consumers, for the customers. So we can expect them in future to sell mutual funds, insurance, uh, and a lot of other things to customers. There's a similar aspect on the business side. There has to be payment companies which the merchants are using, which ultimately just give out loans and make money through that. And that is exactly what the vision for Loan Simple is. They are giving loans to small businesses, and to enable that, they have created this payment infrastructure on back of UPI, which allows the merchants to build their credit history by accepting payments from any of these other consumer facing apps. The business metrics for Loan Simple are very interesting. Their typical loan size is about 1.5 lakh rupees. The asset under management are currently about 7 crore rupees. They have given out 500 loans, of which one loan had gotten bad, which is excellent as per the industry standard. And they're collecting 98% of the money automatically on a daily deductible basis. The founders are Daman Kohli and Sani Chaudhary. Sani is IIT Delhi, and Daman is MBA and was a banker in his past life, investment banker. Both of these people were part of our execution team in Nolarity. So I have known them for more than 6 years now personally, and I think very, very highly about their work ethics. These are the kind of people who are required to build a business in the SMB lending space in India, not the kind of people who will like to uh, brag about things or talk loud about things and talk more and deliver less. They are the exactly the opposite, willing to do the unsexy, hard grind of building a business. So I think the perfect team to build a business like this. Any questions regarding this? We are happy to answer that. Please drop us a mail on ps1.ventures@gmail.com. Thank you.